I often get asked about what's the best way to grow a business. Is it organic growth or is it growth by an acquisition? So I've got a model behind me that I'd like to show you. Now, what you can do is you can easily create a piece of paper template like this with just a couple of inverted ice cream cones shown on it. But look, if I step you through on the model behind me on the screen, and you'll get some ideas of how to use this to just map out, should you be driving your business for organic growth or for an acquisition growth? So let's have a look at this. So in this business here, we've got our sales minus our cost of goods. And in this example, we're saying that your cost of goods includes your fee earning labor. If this was a motor mechanic business, we would have our fee earning labor motor mechanics there and our materials there. Now, for a motor mechanic business, you'd be looking at taking your labor and increasing it by at least a 3 times multiple to get to your sale price. So if you're paying a person say $40 an hour, you would want to be charging that person out at 3 times that, so you can recover your cost. But more about that one in another video. In this example, going back to here, we're assuming we've got sales of $500,000 per year. This number comes out of your profit and loss statement. Now that $500,000 a year is spent on labour and materials, and what we do as the owners of the motor mechanic business is we mark it up by 100%. So $500,000 gives us $1 million of turnover. So $1 million minus $500,000 of cost of goods gives us a gross profit of $500,000. Now our expenses come out to run the rest of the company out of our gross profit. So in this example here, for rent, insurance, accounting, secretaries, and all of the other expenses that you can think of, including owner's drawings, but all of these expenses here are $350,000, and I'm putting a nominal amount in here of, say, $100,000 for the owner's salary. So if we take that and we add those two together, $100,000 for the owner and $350,000 for all of these expenses, we come to $450,000. Now, if you take that away from your $500,000 gross profit, you've got yourself a nice, tidy $50,000 down the bottom. Now, as far as you're concerned as the business owner, all you're going to be interested in is this little bit that's in red. And that's the ideal situation. Now, you've got a choice now at the end of the year, depending on your spouse pressure or your partner pressure. You can take that $50,000 and go and buy a BMW, or you could go and buy a Mercedes, or you can go and buy whatever it is that you want to buy with that profit. But it's not going to allow you to grow the business much, except talking about your debtor turns and your profit recovery rate. So no BMW this year. What we want to look at is reinvesting that $50,000 back into the business. Now, I often get asked, where do I invest it? Well, if we invest that $50,000 paying more rent, we're going to make the landlord a lot more happy, but I don't think you as the business owner are going to be any more happy. We could pay it to our insurance broker. No, that's not a good idea either, because that's going to make the insurance broker a lot happier, but it is not going to put more money in your pocket. We could pay more to our accountants, and I'm sure that your accountants are going to absolutely love this if you go back to them and say, I'd like to pay you some more money, which is the topic of another video. But what we want to do is reinvest that money, and the logical place to reinvest it is back up into our cost of goods. So let's see if we can make this make sense, and we will take this $50,000 and add it to the $500,000 we had last year. So now we've got $550,000 in our cost of goods being spent on our labour and our materials. And if we assume that our ratios are still the same, then that will generate $1.1 million. So $1.1 million in sales minus 550 gives us 550 here. And in this example, I'm going to be totally unrealistic through the power of video. And I'm going to say that your expenses are not going to change. So it's still going to be $350,000 across here. So this would be year 1, year 2, year 3, and year 4. And this is a way that you can work out, should you be heading towards an acquisition or should you go through organic growth? And there'll be another video on the website about doing an acquisition and how that can work the numbers better for you. So what we do now is we take the $100,000 there, the $100,000 there, no salary increase for the owner, another $100,000 there, that makes $450, $450. As I did say, this is unrealistic, but it just gives you an idea of how the mathematics works. So what we're doing is we're taking that $50,000 and investing it back up there. And here, this is a great return on an extra $50,000. When you take 450 of your fixed expenses away from your 550 of your gross profit, you're left with now $100,000, which is a terrific increase on your $50,000 that you had. You've now got $100,000 back, which is a great investment and a return out of your business that you're hopefully totally in control of. So what we want to do again is if we could get a doubling of that, that's not a bad deal. Let's see what happens if we do it again. So now we take that 100 and we add it back up to here. So 550 plus 100 takes us now to 650, and 650 and 650 takes us to $1.3 million. Minus the 650 takes us down to $650,000 of gross profit to run the rest of the company again. Minus our 450, and it's an amazing $200,000 of net profit that you've just generated by organic growth. Now let's do this again, as long as our shareholders are comfortable in not taking that BMW out yet. So we roll this up again into here. That 650 now becomes 850. And that 850 now goes up to here, $1.7 million, gives us 8,500 here, minus our 450. Have a look at this. $400,000 of net profit. This is the power of leveraging your business through organic growth. Now this is a great tool just to work out for you, is organic growth the best way for you? So you can see that we started down the bottom here. You're interested in the red net profit, and within 4 years, you're growing your net profit, plus you're still taking your drawings of $100,000. Look, this is a great tool that I use with my clients to map out whether we should be doing organic growth, what level of marketing we need to be doing, and it's a tool that I'd recommend for you. So please have a play around with it, put it down in numbers. If you've got any questions, please send me an email and I'm happy to answer any questions you've got. So good luck with using this tool.